What's happening to Dogecoin? Why is one of the world's most talked about cryptocurrencies suddenly losing momentum?
Over the last 24 hours, Dogecoin has dropped sharply, more than 5%, while the entire crypto market seems to be sliding into another bearish wave. But this fall isn't just another random dip. Behind it lies a complex mix of investor psychology, global economics, and strategic market positioning that's reshaping how people view digital assets like Doge. Stay with me, because by the end of this video, you'll not only understand why Dogecoin is falling today, but also what it could mean for the coming months and whether this drop is actually a hidden opportunity in disguise.
Let's start with the big picture. Across the crypto world, red numbers are flashing everywhere. Bitcoin is down around 3%. Ethereum slipped over 5%. And Dogecoin, once again, is taking an even sharper hit. Traders are pulling back, volume is thinning, and sentiment has turned cautious. But to really understand this moment, we need to dig deeper than just price charts. Because crypto doesn't fall without reason, it reacts to pressure. And right now, that pressure is coming from both the global economy and inside the crypto space itself. The first and biggest factor is the macroeconomic environment. Investors are currently on edge about what the US Federal Reserve will do next. Yes, there's talk of another interest rate cut this year, but there's also confusion. Inflation is cooling, but not as fast as expected. Global tensions are rising, and the markets hate uncertainty. That uncertainty pushes investors towards safety and away from riskier assets like cryptocurrencies. Whenever that happens, meme coins like Dogecoin tend to feel it first. Why? Because they're driven more by community energy and speculation than institutional backing. When the market turns fearful, retail investors are usually the first to exit, locking in profits before the next wave hits. And that's exactly what's happening now.
After months of steady gains, Dogecoin up more than 35% year-to-date, traders are cashing out. Profit-taking has triggered a chain reaction.
As some investors sell, others panic. Algorithms detect momentum loss and automatically execute sell orders.
The result? A sharp dip that looks worse than it really is.
But there's another layer, sentiment. The crypto market is emotional.
One tweet, one rumor, one comment from a big figure like Elon Musk, and everything shifts. Over the past few weeks, Dogecoin's social engagement has dropped slightly.
Fewer viral posts, fewer mentions, and that means less hype.
When the noise dies down, short-term holders lose patience. Still, there's more to this story than fear in selling.
Let's talk about the shifting dynamics inside the crypto ecosystem.
While Dogecoin is slipping, other meme coins and altcoins have been quietly gaining attention. Investors chasing quick gains often rotate from one trending token to another. As liquidity moves, Dogecoin temporarily loses spotlight, even though its fundamentals haven't changed much. Now combine that with external economic stress, oil price volatility, war tensions, interest rate worries, and you get the perfect storm. In times like these, traditional investors start trimming risk.
That sentiment spills into crypto, amplifying the pressure on speculative assets like Doge. But here's the part many people miss: these downturns aren't necessarily signs of weakness.
They're part of crypto's natural cycle. Dogecoin has gone through similar corrections before, and nearly every time, the dips turned into new bases for future rallies.
Think back to early 2021. Dogecoin was trading at fractions of a cent before rocketing upward as mainstream attention exploded. Each major rally in crypto history was preceded by a phase of fear, exhaustion, and consolidation, exactly like what we're seeing now. Let's look at data. Dogecoin's year-to-date chart shows strong upward momentum overall. Despite short-term red candles, it's still outperforming most traditional stocks in percentage growth. That means long-term believers are still in profit. What's happening now is a recalibration, a pause before the next move. Another reason behind this drop could be whales, large holders, shifting their positions. On-chain data shows some major wallets have been moving Doge to exchanges, likely for short-term selling or portfolio rebalancing. Every time that happens, retail traders react emotionally. But experienced investors know whales often use these phases to create liquidity, buying back in once prices stabilize.
The truth is, Dogecoin's price action today reflects more psychology than fundamentals. Nothing about its blockchain has suddenly changed.
Transaction volume remains stable.
Community engagement, while slower, is still one of the strongest in the meme coin space.
And Elon Musk's indirect influence through Tesla, SpaceX, and X, Twitter, continues to keep Dogecoin in the cultural conversation. So, if the fundamentals are fine, what's really causing fear? It's the lack of clear short-term catalysts. Traders want instant moves. When weeks go by without big announcements, they assume stagnation. But crypto is a long game. The real question isn't why is Dogecoin falling today? It's who's quietly accumulating while everyone else is panicking.
Let's consider this scenario. If the Federal Reserve indeed cuts rates later this year, liquidity will flow back into risk assets. Bitcoin will likely rebound first, then Ethereum, and eventually meme coins like Dogecoin follow with exaggerated gains.
History shows that every major bull run begins right after people lose confidence.
So, when the crowd starts saying Dogecoin is dead, smart investors start paying attention.
Here's the truth: volatility is not the enemy. It's the heartbeat of crypto.
And Dogecoin, being one of the oldest and most battle-tested meme coins, has survived every market storm so far.
From its humble origins as a joke to its current position as a globally recognized digital asset, Dogecoin's strength lies in its resilience and community.
This drop, as painful as it looks, is part of a much larger rhythm. When prices fall, emotion takes over.
Fear dominates social media. Headlines scream negativity. But behind the scenes, accumulation begins.
Every major crypto rally has started from a phase just like this, quiet, uncertain, filled with doubt.
That's why it's important to separate noise from signal. Yes, Dogecoin has fallen today.
Yes, short-term traders might lose patience.
But that doesn't erase its long-term relevance or potential for explosive moves once sentiment flips.
Remember, Bitcoin has dropped more than 70% multiple times in its history, only to make new all-time highs. Dogecoin, though built differently, follows a similar emotional curve. The investors who understand that are the ones who hold through uncertainty and benefit when the crowd comes running back.
So, what should you take away from this? Dogecoin's fall today isn't the end of the story. It's a snapshot, a moment in time during a constantly shifting landscape.
The reasons behind the drop are clear: profit-taking, macroeconomic tension, and temporary sentiment loss. But none of those erase Dogecoin's community power or its ability to surprise the market. If anything, history suggests these dips are opportunities for accumulation, not panic. Because when the next wave of optimism returns, when liquidity floods back into crypto, and when social media once again turns its eyes toward Doge, those who stayed patient often come out ahead.
So before reacting to the red candles, step back. Look at the bigger trend. Dogecoin is still one of the most recognizable names in the crypto world. It still moves markets. And it still has the potential to roar back stronger than before. This is not financial advice, it's perspective.
Because in crypto, perspective is power. And that's why, even as Dogecoin falls today, the story isn't over. It's just entering another chapter in the long, unpredictable, and thrilling saga that keeps millions watching every move this coin makes.